story. Massive reversal bar of the lows on the 7th of August. I highly suggest, and I believe it should be mandatory, that all members and subscribers go take and listen to my videos from that time frame, from the 7th, from the 11th, and from pretty much that end of the week, Thursday the 7th, Monday the 11th, around that time frame. You can clearly see the pattern that I identified, and that exact pattern has come into play, come into fruition. And that's pretty much what predictive analysis is, what it's all about. And I've been very successful in doing that over several times in this cycle in the market. So let's start off with November 2012. Shown this many times, but then you start to see the clear storyline. As you can clearly see, this is almost picture perfect. In hindsight, everything is picture perfect. Everything is 20/20. But it's good to analyze it and see the lessons that we learn, and why we panic at lows, and why we don't aggressively go super aggressive when we realize that these patterns do come into play multiple times. But that's human nature. We tend to shy away from risk, and we tend to and most traders try to embrace euphoria. My point is that I try to be somewhat aggressive on the bottom side, yet I do take my profits and leave some percentage of the position open, and that's pretty much my modus operandi. And as you very well know, that going into overnight holds, despite volatile markets, I will always have 10 or 20% of the portfolio running, with hedges at times, like we did on Friday, and that works out very well. So, saying all that, we have this trend line here, which was held. As we can clearly see, this particular run on the S&P 500, we did not come close to the 200-day moving average, which is here. We did come to the lower end of the Bollinger. Let me magnify this, and 1 second. Let me show you the same pattern symmetry in place here. This was a pretty significant bottom. Look at this. Look at these similarities. Bottom. Look at this similarity. One here. This was a big one right here. And that was the February one, the one that I'm drawing the closest correlation to, which is very similar to this, what we're going through right now. Now, if you look at that, this is exactly what's going on. Now, this particular one continued for many days till we reached the upper end of the Bollinger. So if that's the case, then we are going to get back to its we're almost going to get back to its 2000 on the S&P. Is that going to happen in a straight line? I don't think so. Is the trend in place? Absolutely. So one has to if one is a trader, they'll try to scalp any sort of mini pullback, lock and load on those pullbacks, and move on. There are absolutely no guarantees this pattern is going to come into is going to be exactly the same. But looking at past history, we can clearly see that that has been the case over and over again. The media is always super bearish at the bottoms, and then they come out and then they can't believe that these pattern symmetries, occur methodically. But that's what you're here for, to learn from this. I'm learning every day, and it just amazes me how good they work. So let's take a closer look here. What's going on? We have an upper end of the Bollinger here at the acceleration band, the Bollinger Band at 2001, and then the acceleration bands at let's see here, the acceleration band is in green, so basically around 1993 to 2000. Now, looking at the pace of this type of reversal, it's just fantastic. Now, people might say, how can this happen? We drop on a waterfall. We drop from on the 29th, at the end of July, we drop and we crash and burn for about a week, and then within a week we're well above the 34 and the 50, and all the uptrend is very much in place. Well, it happens because of technology. We are talking about nanosecond algo HFT driven machines, programs which can buy and sell 1,000,000 times, and what took normally weeks now take days, if not hours. Once we get used to the fact that that is the new normal, then we will accept that. Then it's not that hard to believe, and that's pretty much what it is. You know, we have 2 histogram bars here, green, as you can see, and if you look at it here, this. Let me get my drawing tool out here. When we have this type, I'm comparing this very close to what happened in February. Okay. Same type of readings on the oversold readings, the sentiment readings, the whole works. You know, the world's coming to an end. This type of stair step down. You know, no end. A little bit of consolidation here, then another huge drop, very similar to here. Coming. So basically, what happened here? We continued for days, and we went to the top of the Bollinger. If that's the case, this is what's going to happen. We did have one. We had one down day here after there was a little consolidation after the first, second, third, fourth, fifth day. We are now first, second, third, fourth, fifth. So we could very well have a small consolidation as we go into the week with all the different events that are taking place. But if this, like you see, it's very, very similar. That's all I have to say. Histograms, a second day of a large bar. We are at the top of the Bollingers, which is where we were here. Then the huge acceleration up. So don't be surprised if we get back another 100-point days I don't know if it's going to happen tomorrow, but very well could happen as we get into Thursday and Friday. Okay, so that's the S&P, and it's just it's just the market. Let's take a look at the SPY, if I can get this out. Perfect. So let's look at the SPY on a 60-minute basis, shorter term chart. Okay, this is where we broke down, and so if you want to look at it this way, this is the perfect pattern symmetry. Here was the multiple bottoms. Okay, this is what throws traders off, including myself. This is what happens. So if you take all these lines out, let me show you something interesting here. And we all deal with this because we're all in the market together. When you have 1, 2 hollow candle, mind you, 3 multiple bottoms, hope becomes a distant memory. At that point, it just feels like this market just will not go up. Okay, becomes like this. This also happens to be a bullish falling wedge. So once it breaks out of the wedge, it has to do with force. Therein comes this very powerful green candle. Once you see this, there's going to be a little consolidation, and then it goes up. Then it creates a small flag. I've shown all this in my videos, in my videocast and intraday, so please, pay attention. And then this bull flag breaks out, goes up. This is completely, in my opinion, manipulated. You had a massive drop, then a pull-up, and then today, which is creating a small flag. I believe this flag can come down here, rest a little bit, given the fact that we have filled this gap. And again, my charts have shown this many, many times intraday. We've filled this gap. We can come down and test the gap a bit, and then we move from here. But most probably, from what it looks like, we're going to get back at least towards 198, if not the top. And that's going to happen very quickly. If we do break down below 195.75 or thereabouts, running out of time here, then we're going to come down and test 194.50, which is the 50-day moving average. At this point, the standard deviation is quite high from the 34 and the 50, which simply means this is the standard deviation, how far we are away from these lines, so which simply means there's a little bit of consolidation that needs to take place. And that's probably what's going to happen over the next 24 to 48 hours. Intraday, mind you. I'm going to move on to the other charts in the next